What if I told you that the United States government just seized $177 billion from Venezuela, and almost nobody noticed? Not in headlines, not in outrage, not even in Parliament or Congress. It happened quietly, through legal paperwork, diplomatic language, and the kind of financial architecture most people don't even know exists. And here's the part that should terrify you. This wasn't about Venezuela. It was about rewriting the rules of how money works, who controls it, and what happens when your wealth exists inside a system that can simply decide you no longer own it. This isn't speculation. This already happened. And the implications aren't coming. They're here. Let's start with what actually occurred. In early 2025, the U.S. Treasury, working through the Office of Foreign Assets Control, OFAC, formalized the seizure of Venezuelan state assets held in international reserve accounts, gold deposits stored in the Bank of England, and offshore corporate entities tied to PDVSA, Venezuela's national oil company. The total? $177 billion. The official justification was sanctions enforcement, asset recovery on behalf of creditors, and recognition of a rival political authority. But strip away the diplomatic language, and what you're left with is this. A sovereign nation's wealth was deleted from existence by another nation's legal system. No war, no invasion, just paperwork. Now, most people hearing this will assume it's about Venezuela, a failed state, a corrupt regime, a country that deserved it. And that's exactly the reaction this kind of move depends on. Because the moment you accept that this is justified in one case, you've accepted the precedent. You've agreed that money held in the international system isn't really yours. It's conditional. It's permission-based. And permission can be revoked. Here's what makes this different from every other sanctions story you've heard. This wasn't freezing assets. Freezing means the money still exists. It's just locked. This was a legal transfer of ownership. The wealth didn't disappear. It moved. It was reassigned. And once you understand how that's possible, you start to realize how fragile the entire architecture of global wealth actually is. Let me explain the mechanism. When a country holds foreign reserves, it doesn't keep them in a vault. It holds them in accounts at central banks, mostly in the US, the UK, and the European Union. When a country owns gold stored in London, it doesn't physically possess it. It owns a legal claim to that gold, recorded in a ledger controlled by the Bank of England. When a state-owned company has assets abroad, those assets exist inside corporate structures governed by the legal frameworks of the countries where they're registered. And here's the key. All of that, the accounts, the claims, the legal structures, exists inside a system that operates under someone else's jurisdiction, which means it only exists as long as that jurisdiction says it does. Venezuela's reserves were denominated in dollars, held in New York, subject to U.S. law. Their gold was in London, subject to British courts. Their corporate entities were offshore, subject to international arbitration. And in each case, the host country made a legal determination that those assets no longer belonged to the Venezuelan government. They determined that a different political authority, one recognized by Washington and London, was the legitimate owner. And just like that, $177 billion changed hands. No tanks, no blockades, just judges and legal filings. Now, if you're thinking this only applies to regimes the West doesn't like, you're not paying attention. Because this same structure applies to everyone. Every central bank holding dollar reserves is holding them in accounts that exist inside U.S. jurisdiction. Every ounce of gold stored in London is subject to British law. Every sovereign wealth fund invested in Western markets is operating inside a legal system that can, under the right circumstances, decide those investments are no longer yours. The entire global financial system is built on the assumption that property rights are respected. But what Venezuela just experienced is proof that property rights are not universal. They're conditional. And the conditions can change. Let's talk about who this actually affects. Start with nation states. There are roughly 60 countries currently under some form of US or EU sanctions. That includes Russia, Iran, Syria, North Korea, and a rotating list of others. Together, these countries hold hundreds of billions in foreign reserves, most of it in jurisdictions that could, in theory, do exactly what they did to Venezuela, and they know it, which is why you've seen an accelerating move away from dollar reserves over the past 5 years. Russia liquidated most of its treasury holdings before 2022. China has been quietly diversifying. The Gulf states have been buying gold and repatriating it physically, because they understand that wealth held in someone else's system is not wealth. It's a liability with an expiration date. But this goes way beyond governments. Think about sovereign wealth funds, pension systems, corporate treasuries. Any large institution holding wealth in the international system is holding it inside the same structure that just erased Venezuela as $177 billion. And the precedent is now set. If a court in New York or London can decide that a foreign government no longer owns its reserves, what stops that same logic from being applied to a state-owned enterprise, a foreign pension fund, a private individual holding assets in a jurisdiction that suddenly decides they're politically undesirable? You might be thinking, I'm not a foreign government. This doesn't apply to me. But let's test that. If you hold stocks, bonds, or cash in a brokerage account, do you physically own those assets? No. You own a claim to them, recorded in a ledger controlled by the brokerage, which operates under the regulations of the country where it's licensed. If you hold money in a bank, do you own that money? Legally, no. You're an unsecured creditor to the bank. The bank owes you that money. But if the bank fails, or if the government decides your account is subject to a levy, or if you're deemed to be in violation of some sanctions framework, that money can be frozen, seized, or reassigned. And there's nothing you can do about it because you never actually held it. You held a promise. And promises are only as good as the system that enforces them. Now, let's escalate this. The seizure of Venezuelan assets wasn't just about punishing a regime. It was about establishing a playbook, a legal framework that can be applied again. And it will be. Because the incentives are now fully aligned. The United States is running deficits that require constant foreign financing. Its banking system is built on euro-dollar liquidity and offshore dollar creation. The entire architecture depends on foreign entities continuing to hold dollars and dollar-denominated assets. But as more countries move away from the dollar, as de-dollarization accelerates, the U.S. has fewer tools to maintain control. Except one, the legal system. The ability to redefine ownership, to seize, freeze, and reassign assets held within its jurisdiction. And Venezuela was the test case. Think about what this means for the future. Every country watching this now understands that holding reserves in dollars or euros is a political risk, not just an economic one, which means they'll continue moving toward alternatives, gold, commodities, bilateral trade agreements in local currencies, Bitcoin, anything that exists outside the Western legal system. And as that happens, the dollar's role as the global reserve currency weakens, which means U.S. power weakens, which means the incentive to use legal seizures as a tool increases. It's a feedback loop, and it accelerates. But here's where it gets even darker. The seizure of $177 billion didn't just hurt Venezuela. It hurt every creditor, every bondholder, every investor who was expecting to be repaid by Venezuela using those reserves. Because now those reserves are gone, which means defaults are more likely, which means legal battles over who gets what, which means the entire debt structure tied to Venezuelan assets is now in chaos. And here's the kicker. The same investors and banks that lobbied for sanctions are now fighting over the scraps of the very wealth they helped seize. It's not justice, it's a wealth transfer from a foreign state to Western creditors and legal firms, dressed up as human rights and democracy. Let me give you the conservative math. Venezuela's proven oil reserves are the largest in the world, over 300 billion barrels. At current prices, that's roughly $20 trillion in the ground. The country also holds an estimated 73 tons of gold in the Bank of England, currently worth about $5 billion. It has offshore corporate assets, real estate, and accounts scattered across dozens of jurisdictions. The 177 billion figure represents liquid and semi-liquid assets that could be legally seized under current frameworks. But the total wealth tied to the Venezuelan state is vastly larger, and none of it is safe. Because if the precedent holds, every bit of it can be claimed, reassigned, or liquidated by courts in New York, London, or Brussels. Now let's talk about what happens next. The immediate effect is that no sane government will hold significant reserves in a jurisdiction that can seize them, which means capital flight from Western banks, which means less liquidity in the euro-dollar system, which means higher funding costs for U.S. deficits, which means more pressure on the Federal Reserve to keep rates low or restart quantitative easing, which means more inflation, which means the purchasing power of your savings, denominated in dollars, continues to erode, not because of Venezuela, but because the system that just seized Venezuela's wealth is the same system your wealth is tied to. And that system is now proving it will rewrite the rules whenever it needs to. Here's the part that should keep you up at night. The seizure wasn't announced with fanfare. It wasn't debated in Congress. It didn't require a declaration of war or an emergency session of the UN Security Council. It happened through bureaucratic process, legal rulings, diplomatic recognition of a rival government, and it worked, which means it will happen again. And next time, it might not be Venezuela. It might be a country you do business with, a country where your company has assets, a country whose bonds you own. Or it might be you. If you're ever deemed to be on the wrong side of a political line, inside a system that has now demonstrated it can delete your wealth with a court order. But let's go even deeper. Why 177 billion? Why that specific number? Because it's not just about the money, it's about the signal. It's large enough to matter, large enough to terrify every finance minister and central banker who saw it happen. But it's small enough in the context of global reserves that it didn't cause a systemic crisis. It was calibrated, a demonstration of power, a warning shot. And the message was clear. If you hold your wealth in our system, it's ours to take. Now, some will argue this is justified. Venezuela is a dictatorship. It has violated human rights. It has mismanaged its economy into collapse. and all of that may be true. But the question isn't whether Venezuela deserves criticism. The question is whether the United States, or any country, should have the unilateral power to seize another nation's wealth based on its own legal interpretations. Because if the answer is yes, then wealth is no longer a property right. It's a privilege, and privileges can be revoked. Let's connect this to the broader trend. Over the past decade, the U.S. has frozen or seized assets from Russia, Iran, Afghanistan, and now Venezuela. The European Union has done the same. The total value of frozen or seized assets globally now exceeds $1 trillion. And every single one of those seizures was justified using legal frameworks that were originally designed for counterterrorism or anti-money laundering. But they've been expanded, stretched, applied to nation states. And now, with Venezuela, they've been used not just to freeze assets, but to transfer ownership. That's a new level, and it's irreversible. Here's what makes this so dangerous for you. The same legal tools being used against foreign governments are already being used against individuals. Civil asset forfeiture in the United States allows law enforcement to seize property without a criminal conviction. Bank accounts can be frozen under suspicion of money laundering or tax evasion. Crypto held on exchanges can be confiscated if the exchange is deemed non-compliant. And all of it happens through the same legal architecture that just took $177 billion from Venezuela. The scale is different, but the mechanism is identical. Let me paint the picture of what this enables. Imagine a future where geopolitical tensions escalate, where the US and China move closer to conflict, where European nations face energy crises and political instability. In that world, the ability to seize foreign assets becomes a weapon, not a last resort, a standard tool. And once that becomes normalized, the definition of foreign starts to expand. Dual nationals, expats, corporations with foreign ownership, anyone holding wealth in a jurisdiction that decides they are a risk. The line between a sanctions target and a private citizen gets blurry. And the precedent set by Venezuela makes that blur legal. Now, let's talk about what this means for the dollar. The dollar's dominance isn't just about trade or oil or military power. It's about trust. Trust that if you hold dollars, they'll be worth something tomorrow. Trust that if you store wealth in dollar-denominated assets, it won't be confiscated. But that trust is conditional. And Venezuela just proved the condition can be revoked. So what happens when that trust erodes? Countries stop holding treasuries. They stop pricing commodities in dollars. They stop using the SWIFT system. And the U.S. loses the exorbitant privilege of printing the world's reserve currency, which means it can no longer finance deficits at low cost, which means austerity or inflation. There's no third option. But here's the twist. The seizure of Venezuelan assets might actually accelerate the very process it was meant to prevent. By demonstrating that dollar reserves aren't safe, the U.S. just gave every other country a reason to leave the system, which weakens the dollar, which makes the U.S. more desperate to maintain control, which leads to more seizures, more sanctions, more weaponization of the financial system. It's a doom loop, and it's already in motion. Let me give you the timeline. In 2017, the U.S. froze Venezuelan government assets. In 2019, it recognized Juan Guaido as interim president and transferred control of some accounts. In 2022, Britain's courts ruled that Maduro's government couldn't access the gold stored in London. And now, in 2025, the full legal seizure is complete. $177 billion reassigned. Each step was incremental. Each step had legal justification. But taken together, they represent a complete erasure of a nation's wealth. And it happened without a war, without an invasion. Just law. So what does this mean for you? If you hold wealth in the traditional system, in banks, in brokerage accounts, in pension funds, you need to understand that your ownership is conditional. It exists as long as the jurisdiction you're in says it exists. If that jurisdiction changes its mind, your wealth can be frozen, seized, or reassigned, and the precedent is set. It's not paranoia, it's pattern recognition. If you're invested in international markets, you need to understand that geopolitical risk is now financial risk. A court ruling in London can wipe out billions. A sanctions package in Washington can freeze entire sectors. And there's no warning, no democratic process, just legal frameworks that were built for one purpose and are now being used for another. If you're planning for retirement, for wealth preservation, for passing assets to the next generation, you need to understand that the system you're planning inside of is being rewritten in real time. The rules that applied 10 years ago no longer apply. The assumptions that guided financial planning, diversification, dollar stability, rule of law, those assumptions are now conditional, and the conditions are political. The math is simple. $177 billion was seized. It won't be the last. The precedent is set. The legal tools exist. The incentives are aligned. And the countries capable of doing this, the US, the UK, the EU, are facing deficits, debt crises, and declining geopolitical power, which means they'll use every tool available. And one of the most powerful tools is the ability to redefine who owns what. This isn't about Venezuela. It never was. It's about power. It's about control. It's about a financial system that operates on trust, but enforces through law. And when the law can rewrite ownership, trust becomes irrelevant. You don't own your wealth. You have permission to access it, and permission can be revoked. The people who understand this are already moving. They're buying physical gold. They're moving wealth into jurisdictions with strong property rights. They're diversifying out of dollar-denominated assets. They're preparing for a world where the rules can change overnight, and they're doing it quietly. Because the moment this becomes consensus, the exits get crowded. Here's the final piece. The seizure of $177 billion from Venezuela wasn't a punishment. It was a demonstration, a signal to every other nation holding reserves in the Western system. This could be you, and it worked. Because now, every finance minister, every central banker, every sovereign wealth fund manager is asking the same question. How safe are our assets? And the answer, based on what just happened, is not very. The window is closing. Not in years, not in decades. Now. Because once this becomes the norm, once asset seizures are routine, the system fractures, the dollar loses its status, the international financial architecture collapses. And we enter a world where wealth is only real if you can physically control it. We're not there yet. But Venezuela just showed us the map, and the destination is unavoidable. So here's the question I will leave you with. If a court in New York or London decided tomorrow that your wealth no longer belongs to you, what would you do? Drop your answer in the comments. Because the precedent is set, the tools are proven, and the next target is already chosen. You just don't know it yet. The math is already locked in.